And business is now with Madison Reedy. Okay, Madison, so financial regulators fossicking around Fonterra, what are they looking at?
They are looking at the write-down that it actually announced last month. Now, this is the result of a farmer shareholder in Fonterra. His name's Colin Armour. He actually complained to the financial regulators, being the Financial Markets Authority. Now, he complained over these write-downs, which Fonterra announced last month about to the tune of $860 million, writing off the value of its overvalued and underperforming businesses, both locally and internationally. Now, as if you can remember as well, they expect that to result in an annual loss of between $590 million and $675 million. We're about to hear more on that next week. But for the time being, Colin Armour says the auditors of Fonterra should have picked up on this much earlier, because these businesses, which were overvalued, have been underperforming for some time now. Now, he says he actually raised this issue with Fonterra, both in person and via email, a number of times. And he's also calling out the Shareholders' Council, which is supposed to be the body of shareholders which looks over Fonterra's management and its board. He has called them, quote, inept, and he actually says that he wants that to be reformed. Now, the Financial Markets Authority has said that it is engaging with Fonterra about this, and it's asked Fonterra for more information about how it came to decide on the value of these write-downs. And it's also passed these concerns on to the Chartered Accountants of Australia and New Zealand organisation, which is basically the frontline regulator of audit firms in this country. Now, Fonterra has responded here too. Now, they say that this expected annual loss as a result of the write-downs is just an estimate based off their own decisions here, and it is yet to be audited. So we're about to find out their full year audited financial result next week.
Interesting. Okay, trade figures came out today. What are they telling us?
Yeah, this is the terms of trade. So that rose 1.6% in the 3 months to June in that quarter. Now, this means that New Zealand's trade position has improved, and that's because our export prices rose more than our import costs. So export prices were up 3.5%, import prices were up 2%, but by less, at just under 2%. Now, that means that we can afford to buy more imports for our export earnings, basically more bang for our buck here. And this is actually the strongest that New Zealand's trade position has been in close to 40 years. It's mostly because the price of both dairy and meat that we earn overseas has risen. But of course, the currency has also played its part here as well. The weaker, softer New Zealand dollar that we're seeing at the moment means that exporters are earning more on the products that they're selling overseas.
Yeah, speaking about that dollar, let's do a quick whip around the markets. What have you got for us?
That dollar is buying at 63.1 US cents, 93.8 to the Australian, and 51.9 British pence. The NZX Top 50 index, that closed up 0.4% tonight. That's a rise of 43 points to close at exactly 10,800 points tonight.
Thanks, Madison. Madison Reedy with our business update.